Okay, good day everyone. This is Sasseur REIT's business and operational updates for third quarter ended 30th September 2024. Date of the presentation was 8 November 2024. Alright, I'm doing this because a subscriber asked me to cover Sasseur REIT, so this is the first time I'm having a look at it. Alright, we look at the 9-month 2024 EMA rental income. Alright, so EMA rental income is quite a unique thing they have, right? So later we'll cover it. Right, occupancy is very good, 98%. It's even a record high. Right, we look at the portfolio results, 9-month year-on-year results, as well as third quarter year-on-year results. So this third quarter year-on-year results and 9-month year-on-year results. So third quarter year-on-year results, we can see that the total outlet sales, all right, so they are an outlet mall, right? So outlet retail mall, right, is I think something that is close to Singapore that we have is IMM, right, whereby they sell branded goods, but they don't sell the latest versions. They sell the maybe older versions at a cheaper price, or maybe there's some defect with it, slight defects, right? So they sell at a cheaper price. So outlet malls are places that sell branded stuff, right, at lower prices, or maybe outdated stuff at lower prices, right? So that's their main business, basically. So outlet mall sales for them, in terms of sales, is down 14% year-on-year for third quarter, right? So this is not good. When we look at the 9-month 2024 results, it's down 7.2%, right? So just from these two numbers alone, right, we can see that actually the first half was quite good, right? So first half have been quite good, that they can drag this 14% down to a 7.2%, right? So first half means first and second quarter was better results, third quarter not so good results, right? Occupancy is very high, 98%, that's great. Weighted average land expiry, I think this is a bit low at 2.2 years. Right, we look at the financials for third quarter, the EMA rental income. So this is the amount of money they make, right? This is somehow related to this, as we'll see later. All right, so the rental income, right, they have two parts to it. One is the fixed component, which is 3% escalation every year, and the other one is a variable component, which is a function of their outlet sales, right? So this does directly affect this value over here, right? So you can see, although this dropped by 14%, all right, their rental income only dropped by 2%. I went to look at their older results, whereby I saw that this thing can fluctuate quite a lot, but this one doesn't fluctuate so much. So when, let's say, this one go up by 20%, let's say, this thing won't go up by 20%. It will go up by some lower number, right? So this part is quite much less fluctuating than this part, the sales, right? So the sales can be a bit scary, and look at the sales fluctuate, right? So the EMA rental income in SGD, right, is down 3% year-on-year and down 1.5% year-on-year. This is due to FX problems, right? So that means SGD grew stronger. So when they convert back, right, actually they get less SGD, right? Balance sheet is very strong. It has the lowest among S-REITs, right, as said here, 25.5%, right? This is very low leverage, right? Interest coverage ratio is very strong. This is stronger than even, I think, most of the blue chip REITs also have a weaker interest coverage ratio than this REIT. Right, so this is very good. Right, average debt maturity is 2.1 years. Right, so this one could be a positive or a negative. All right, we'll look at this later in more detail. Right, if we look at these DPU results, right, I tried to find a trend. Right, so what I did was I tried to compare each half. Right, that means this is second half 18, first half 19, second half 19, so on and so forth. I couldn't see a trend. I compared second half of all the FYs. I also couldn't see a trend. I think first half also got no trend, right? So what I mean is that I can just show you lah. You see this one is down, up, down, 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 right? Yeah, okay, so first half looks like it's always all the way down lah. But if you look at half by half again, down, so this one is 3.5, this 3.2, so this is down, up slightly, down, up, down, up, down, down, right? Up, down, up. So again, no real trend. Okay, so what I'm trying to say is that normally, right, for retail malls, there's some seasonality effect. For example, in December, the spending tends to be higher, so that half, right, they have a higher revenue, right, which probably leads to higher distribution, right? But I don't think Sasseur has this kind of at least at this point, doesn't have that kind of trend, right? So I'm just going to look at the latest results, which is FY 2024 first half results, right? Note that the first half results is as of last quarter, which is second quarter, right? Second quarter they distributed 3.15 cents, right? So if I multiply this by 2, it's 6.3 cents, 6.31 cents roughly. I divided it by today's price, it's around 67.5 cents. It's around 9.34%. So their dividend yield is around 9.34%. It looks very attractive, but do note that you look at third quarter's result versus the first half, right? You already have a sensing that likely second half, which includes this quarter, I think the dividend is going to be lower. Right, that's my anticipation based off the results, that I don't think 6.3% is going to be the whole year result. Right, it's probably going to be slightly lower than this, which means that the yield is probably slightly lower than 9.3% at this point. Right, that's just my guess. Right, they have some accolades. Right, so a best retail REIT is Singapore. Alright, Platinum, Investor Relations Platinum, Best CEO Gold. Right, highest weighted return on equity over 3 years in S-REIT sector. So they've been doing well. Right, yeah, that's great. Right, so we look at the sponsor because it's not very well known what this REIT is, or even the sponsor. Right, the sponsor is actually not a property developer, which is quite surprising. We look at most REITs in Singapore, the sponsor develop property, then try to be more asset light by listing their big properties as REITs, right? However, they are not a property developer. Actually, what they are doing is slightly different. They are just an outlet operator, right? So they actually tried moving in the tier 2 and 3 cities first to take advantage of the aspiring middle class consumer base, right? So they now manage 18 outlets in 16 cities across China, with 100,000 jobs. Right, later we'll look at their super outlet model, right, which is something that I think helps them to attract people to their malls because of the activities and their art, right? Yeah, so it's a lifestyle experience kind of mall. Right, so yeah, I think all this not too much. Yeah, so Sasseur REIT, you can see they have these 4 REITs, these 4 malls over here. You can see the malls are quite unique looking, right? So it's not like your typical mall whereby it's just like one rectangular buildings that's out of the ground. So it's quite well, I don't know whether it's nice or not, but it looks unique. It looks a bit like some kind of park, or some kind of theme park, I would say. Right, so all these are the malls that is under Sasseur REIT. Right, the sponsor has other outlet malls like these two. So the REIT has the rights of first refusal. That means if the boss, not the boss, but the group want to sell these two things, right, the REIT has the first priority to buying it, right? So the buildings itself look quite interesting, right? So this is their super outlet business model, right? So they position the outlet as lifestyle destination for the whole family and incorporate sustainability, right? So they have art, right? So yeah, so there's emotional connection with the outlet featuring local theme, right? So yeah, there's emotional value, right? So there's cultural appreciation, right, including the history of the place. And I suppose even China, right, Chinese people are very proud of their history, right? They have this lifestyle experience. I think this is probably the part where they attract people, right? Sports, kids, and farms, right? So you see that the playground, very interesting, right? I think this is quite a big playground, right? It reminds me of the playground in Suntec City, right? Actually, Suntec City, you walk further down beyond the BYD car showroom, right, there is this playground as well, where parents actually have to pay for their kids to go and play inside, right? So as you play inside with your family, right, you probably spend a day there and spend money, right? So this is something to draw you in, right, to spend money in the mall, right? So this one is a strawberry farm. You pick your own strawberry. So again, activity for the family, right? This is interesting. Indoor zoo, right? I think this is a quite popular animal. I cannot remember what this animal is called, right? So I guess you get to like interact with these animals, which is interesting for kids again, right? Driving school for children to learn how to abide by traffic rules, right? So very, very interesting propositions, right? I guess we have this in Singapore as well, right? But I think these are probably quite unique things, right? So these are probably what you call things that you lose money on to let people to draw people to your place and spend money on other things, right? So for example, right, if you look at some stores, they'll say, oh, you know, come to my store and buy this product which is at a very low price, and maybe they're even making a loss on selling that product at that price. But the point is to get people in to the store itself and then spend money on other products, right? So as they spend money on other products, actually overall it's a profitable venture for them to do that. And you look at their plans to expand to first tier cities in China, my take is that these kind of things are very space intensive. They take up a lot of space, right? So if you take up a lot of space in the lower tier cities, the price of the space there is a lot lower, and it's a lot more easy to make up the loss from having this space. Like how much money can you make off people picking strawberries? I don't think it's a lot, right? So I think this is like the case whereby I'm selling something below cost so that you come here and spend money on other things to make money, for me to make money, right? So I think this idea probably is harder to expand to first tier Chinese cities, right? I might be wrong, right? Primarily because first tier Chinese city, I expect the rent to be a lot higher. All right, so I could be wrong, but this is not something that I'm so positive on, right? So that's just my opinion anyway. Right, so we look at their financial performance, right? So I think we've talked about this quite a lot, so I won't talk about this. Yeah, so you can see the third quarter rental income is down 2% year on year, is due to the variable income down 13% year on year, in line with the 14% drop in outlet sales. Right, so the variable income is yeah, so this part of the income here is actually attached to the outlet sales, right? So the reason why this one is not so close to this one, as we discussed earlier, is because it's cushioned by the fixed component, right? So there's a fixed component that has a 3% year-on-year escalation, right? So this component will always stay, right? So that's why even though the outlet sales drop 14%, right, the rental income is not so, it doesn't fluctuate so badly, right? Yeah, this is the SGD variant. This is due to the FX issues, right? 9 months is down 1% year-on-year. Again, we look at variable income is down 6.8%, and that's because of the outlet sales declining 7.2%. Again, cushioned by the fixed component, right? So this is why, again, that if the variable component goes up, right, the overall EMA rental income again won't go up by as much, right? Because it's always cushioned by this thing, which is quite fixed in nature. Right, so we here see the China interest rates, right? Loan prime rate has gone down 4.6% to 3.6%, right? So that's a 1% drop. So this is a good thing for them because most likely they can refinance at a lower interest rate, and their interest rate is not very low, right? You can see that it has gotten better, 5.6% to 5.3%, but it's still quite high relative to other REITs, the bigger ones. One possibility is because they are small REIT. The other possibility is maybe outlet malls are not very common, so the bank don't have a reference for how to lend them money, so they just charge a bit more. Right, so that's one possibility. Right. So yeah, but this one I'm relatively positive that they can go down further because yeah, as you can see, this cost of debt is going down, right? The loan prime rate is going down, and also if you look at their next year refinancing, it's a lot of debt to refinance. So I think it's a positive for them. Right, that is my opinion. Right, yeah. So this one, in terms of balance sheet, they're quite strong. The only weakness is high cost of debt per year. Right, we look at their performance of their 4 malls. So they have 4 malls. Right, you can see that some of the third quarter results are quite bad, but there appears to be some reason. Right, so if you look at this, third quarter results is down 14% year on year. Right, and you can see that Chongqing is both down by 17+%. Right, so they say this is because of heat waves. Right, so yeah, quite a lot of days above 35 degrees. So you can expect why people don't come out. Right, so they affect shopper traffic and sales at Chongqing Liangjiang outlet. So they are explaining this one. Alright, but I assume that this one not affected. Yeah, so it's not an explanation for why the Bishan one is also down by 17%. Alright, yeah. So the other one is the earthquake, right, which affects this one. Alright, but this one got no real explanation. Right, why is it down by 8.7%? And yeah, I don't know why this one is not included in this explanation. Yeah. So apparently only this one and this one got explanations for why the performance is lower in third quarter as opposed to last year. And also they say that decline in demand for fashion goods from international brands across 4 outlets. Right, so this represents the cost-cutting nature in China. They say here that they are increasing caution in purchasing decision. They are more risk-averse and price-sensitive due to weaker labor market and slow income growth. Right, so yeah, this here is wrong. Sorry, I think what is affected here, right, which is this one is a bit of a worry because you can see these two are more or less one-off things, but this one, I'm a bit more worried because it seems to be a more long-term trend, right, following the labor market and slow income growth issues in China. Right, so if you look at this part, I think the international brand is this one. Right, so sorry about this hit, just ignore it. I think it's not this one. This one is domestic fashion brand. So I think when we talk about fashion brand from international brands that is affected, right, I think it's this part that's affected. Right, so not as bad as I first thought, but still a point of concern we have to monitor looking moving forward. Right, occupancy very good, no complaints there. This is the part where could be a good or could be a bad thing, but this one, they are debt refinancing this year in 2025, right? Hopefully they can get it at a low interest rate, given that their interest rates, their cost of debt is quite high. Right, membership. So this one is somehow the way they make most of their money. They say VIP members contribute more than 60% of the portfolio sales. Right, so I think it's something like a Costco model whereby they give you discounts if you sign up for this membership, and they encourage you to spend more in the outlets. Right, so I guess this is a good thing. It's a nice outward trend. Yeah, I won't go through all this. Yeah, so I think these are some of the international brands. So I think this is the point of concern, right? The part that is not doing so well. Yeah. Nike, so I was wondering if Nike is under sports or international brands, right? So if Nike is under sports, maybe it's not so bad because you see later all their outlets got Nike inside, right? So we're looking down, right? This one I won't cover, right? They still have confidence that in 2025 things will be better, right? So we can see here that total sales in 2023, this is last year, 9.5% year on year. So 2023 they had a good year, 9.5% year on year. 2024, which was last year, 6.5%. 2025, 6.1%. So you can see the trend of improvement is slowing down, but at least it's still growth, right? So they're actually anticipating decent sales still, right? They say that they are more resilient than a traditional mall because when consumers become price sensitive, they seek lower prices while expecting the same quality. I think there's some truth in this statement, but we have to see whether this translates to sales in the first place, because things like fashion, right, actually you can delay your purchase also, so it's a question of how much you're willing to spend on it. That's my opinion, right? So yeah, I think that's it, right? So you can see the malls, you can see that top brands always got Nike inside, right? And the other point to worry about is the land use expiry, right? So you can see this one got 23 years left on the clock, right? This one got more, slightly more, 4 years more, 27 years, right? 29 years, yeah, this one 30 years, 30 years left, right? So about 23 to 30 years left of the rights to use the land, after which they have to negotiate with the government. Not sure how much that will cost to carry on use the land, right? So that's always a point of concern. CLCD has the same issue, right? So again, you can see a lot of times the top brand is Nike, right? So I'm not sure if Nike is considered a sports brand or I think Nike is a sports brand, so I think it's not so bad, right? Initially I thought Nike was considered international brand. So if just international brand is affected, it's not too bad, right? So I think Nike is under sports instead of international, right? So I don't think I talked too much about so this is their model for how they get the money, so outlet sales, then the gross revenue, then there's two components to how they collect the rent, right? This is what is payable to the REIT, right? So with that I'll end the presentation. Sorry it took so long. Please remember, none of this is financial advice. All right, thank you for listening.